Hello everyone, hope we're all doing well. So in today's video, we're going to be speaking about currency strength, right? So we all know that we trade Forex in pairs. So by pairs, I mean an example of Euro USD, GBP USD, USD JPY, and the rest, right? So, and the way we operate in trading, we're either buying or we are selling. So when we're buying, we expect the price of a commodity or the security that we're trading to go up, while when we are selling, we expect the price of the commodity that we are selling to go down. So for these two things that we have just defined to happen, we need to be able to understand the strength of the currencies that are involved in that particular pair, right? So I know most of us, the first time we heard about a currency strength, we heard about it through maybe an indicator, maybe an app. Personally, when I started trading, there was something called the currency strength meter. I don't know if you guys have heard about it, right? But actually, you can determine the strength of a currency just by looking at what we call the currency index, right? Now, let's define what a currency index is. In a layman's language, a currency index is just simply measuring value of a particular currency compared to others. Remember, you cannot compare or measure value when you're just using one particular item. So coming to the aspect of also currencies, when you're comparing, they have to be one compared to another or many others, right? So that's the definition of a currency index, right? So before even we go to how we can determine the strength of a currency, uh, just allow me to just briefly tell you the different types of analysis or trading that a trader can be able to make. The first type of trading, which is very common, is the technical analysis, where we're just using the tools and the charting apparatus given to us by brokers or whatever platforms that we're using. The second common type of trading is fundamental analysis. Though most people don't understand what fundamental analysis is, most of us focus on what we call the subsection, which is news trading. In most cases, scalping like for a minute, right? But that's a topic for another day, right? Then the third type, which we need to understand, is what we call sentimental analysis. So these three types of trading have to go hand in hand. But just like I've said, the most commonly used ones are the technical and the fundamental analysis. Now, talking about fundamental, for example, today we're going to be talking about the currency strength. We cannot talk about currency strength without understanding the economic factors happening in the market. So whenever as a trader you're going to do analysis, just like we're going to do, you need to understand the economic aspects that are going to take place that day. For example, at the time of recording this video, we have very important news that is coming out. That is the USD CPI. There are also other news that is coming out, but the one that stands out today is the USD CPI. Right now, this is very important. Just like I've said, we're going to be speaking about fundamentals in detail in a different video. So, what app do I use or what website do I use? I use the Fastbull website. Personally, I prefer using the website because I'm most times on a laptop. But also, you can download the application and it's easy for you to access. Right, for those people who are mostly on mobile. Now, this website has AI signals which you can be able to compare with your analysis so that you can be able to make very fast decisions. Also, you can check through the analysis of different people, what they're speaking about the dollar. Is it recovering? What are they speaking about cryptos? Whatever they're speaking about, what are the central banks saying? Because this is very key. Also, you can look at news of other sectors. For example, we have different sectors, not only Forex. You can look at stocks and the rest, right? So just make sure you always check this website Fastbull, or you can download the application from the Play Store or the Google App Store, right? So let's go back to the charting, for example, that most of us are used to. Now, how do you determine the strength of the currency? Like we mentioned already earlier on, that we use the what we call the currency index. Now, for example, each currency has its own index. I'll just give you a few examples of what I want us to focus on today. That is the USD. Now, for example, if you're going, because most people trade USD related pairs, especially Euro USD, is the example I'm going to be using. Now, if you want to check the strength of the USD, the value of this, the value of this USD is gotten from what we call the DXY. Now, most people don't even know that the DXY has its own chart, and even some brokers can allow you or permit you to trade it. So now let's just try to understand this briefly. When the DXY, we're going to be talking about the DXY before we talk about the dollar, because this affects this. This determines the strength of this, right? This is one example. The second example is the BXY. Now the BXY is for the pound, the GBP, right? Then we have the EXY, we have the JXY. This one is for JPY. We have the EXY, which is for the euro, the BXY for the pound. But I want us to just focus on the one of the dollar, so that we just make the video short. But whatever I'm explaining on the dollar is the same as the rest, right? So if the DXY is going up, right? What does it mean? It means that this DXY is gaining strength. Now, when DXY is gaining strength, since it's done determining the value of the dollar, it means also the dollar is going to be going up. Are we together? So if the DXY is going down, it means that also the dollar will be going down, because the DXY isn't giving the value of the dollar. Remember, we're comparing it basing on exchange rates of the dollar to other currencies, right? So this is how we determine the strength of a currency, right? Now, let's do it practically here on the chart. I'll just go to my watch list and look for where's the DXY chart here. I'll just open the DXY chart and we do analysis on it just like any other analysis that we have been doing, right? Let me just open the DXY. So when you come to the DXY chart here, let me just clear everything. You'll come here and you mark just the same way you mark to make decision easier. For example, when we start from the monthly time frame, what do we observe from this DXY chart? Now, the DXY has been moving up, up, up. Actually, over a long period of time, it has been in a range, right? So it a bit broke out, then again, we have broken back down in this range. So there's a possibility if it took out this level where it is currently here, slightly above it, it may be continuing down to come and touch this base here. But we're still at a support level, very critical level, which we cannot determine, right? And also, we do have a neckline that the market broke, and it may want to come and first test it before deciding anything else. Now, when you come down the weekly time frame, what do we observe? Now, weekly shows us that this level here was tested, but there's a possibility of the price coming back to test that level. But now, I want us to focus on the immediate aspect, which I normally advise that you focus on. The immediate aspect that I want us to focus on is where price is currently. Now, if you look at where price is currently, what is that? The market made what? It made a low, made a lower high, made a low. And the market hit a support level. Now it has come back to retest the previous lower low. Now, there are two things that can happen here. The market can either break above or it can be rejected from that area, right? But what first comes to your mind when the market comes back to a lower low is a previous lower low is now acting as a resistance. Are we together? So what happens at resistance? We expect a seller to come in. Now, remember what did we say about the DXY? We said the DXY measures directly the strength of the dollar. So if the DXY is at resistance, what does it mean? It means that the dollar is going to first weaken a bit. Any reaction here for it to sell, also the dollar will react by being a bit bearish. Are we together? So if you're to look at other charts, for example, Euro USD, I'm going to use Euro USD, the most common traded pair. Where is Euro USD here? I'm just going to open the chart. So if you look at Euro USD also, it was at my support level here. It bounced off this support. Why? Because the DXY is at resistance. What do we expect at resistance? The market to sell. Now you can clearly see also here the market was at support. Let me just briefly explain this. Let me just delete this. Euro USD, right? Euro is paired against the dollar. Then here we are looking for the strength of this dollar here. So we have DXY. Now we are saying that DXY is at resistance and we expect it to go down. So when it's going down, what does it mean for the dollar? The dollar is weak. So if the dollar is weak, what do we expect the Euro USD to go up? This is exactly what you're seeing here. That's why it hit this support level and started buying. So those who attended and also have been following the breakdowns I've been doing, we say that from here, we expect the euro to bounce and play within here, which is exactly what the euro is doing. We're not going to hold any trade until either it breaks above this area or it breaks below this area. So you can clearly see why I made that statement. I don't make those statements just because out of nowhere, maybe I've marked charts like this. No, it means that I've looked at my aspects like this one here, the currency strength, and also I've done a top-down analysis, which can also help you. And also I've put together factors together like of technical, fundamental and sentimental, right? So I hope you guys have understood this. So let's go back to the chart of the DXY. So let's go back to the chart of the DXY here. So we're at a resistance here. Now let's go down the daily time frame and we see what we are seeing. Now, let me just try to explain something here. I know most of us, I'll just adjust this. I know most of us were seeing this as an inverse head and shoulder already, right? This is a shoulder, head, and shoulder. Now, it is possible it can be an inverse head and shoulders, but it's not valid unless it breaks this neckline, because this turning point here is now acting as neckline. I've spoken about this in a video about head and shoulders and inverse head and shoulders. You can watch it. I'm just going to attach it somewhere in the top right corner, right? So this does not meet all the rules of being a inverse head and shoulders. The neckline has to be first broken. And the neckline happens to be what? A previous support level or a previous lower low, which has now become resistance. So that's why you see the dollar has reached and is reacting a bit. It is becoming a little bit weak. Now, also another thing that I can tell you briefly is this. I know most people will charge you for this, but like I said, most of these things this is free information on the internet that anyone can have access to, right? So, you know, most of these stock indices, by stock indices, I mean like NASDAQ, S&P, Dow Jones, and the rest, right? Especially those ones in the US, now like NASDAQ and S&P. Their value also goes hand in hand with the DXY. So if the DXY is weak, right, we will see these things going up, right? The S&P 500 and the rest. Let's just open one chart just for the purpose of understanding the explanation better. Let's just go to NASDAQ. So if you look at NASDAQ, you can clearly see NASDAQ has been going up. We did analysis. If you've been following our social media handles, we expected the market after creating this M here to go and retest the neckline, right? But you can see it has been rallying because the DXY has failed to break the resistance, right? Which personally I also thought it was going to break that neckline, but it has not. So you don't force the market to do what for you feel like as an individual. So we're at resistance. That's why you see most of the dollar pairs, for example, Euro USD. You saw I showed you on the Euro USD chart. Euro USD was actually at support. And this one, the DXY is at resistance because the dollar is the dollar index is at resistance, meaning that we're expecting sales, right? If we broke above, meaning that Euro USD would be selling, because if we broke above, meaning this thing would be going up, the DXY, right? So you can do this very thing for, you can do it for the pound, you can, the GBP, you can do it for JPY, you can do it for Euro, you can do it for AUD. All of them have their indices, sorry. So that's how you determine the strength of the currency of a country, right? You can use those indicators, the currency meters and the rest, but this is how you do it technically. So now that we have moved away from the other topics, so we are bringing a bit of advanced small things, right? This is not so much advanced, but it's something that you should learn after knowing the basics, like how to mark levels, untested levels, order blocks. If you're using that method, if you're using structure like us, just how to mark turning points properly, trending markets and the rest. That's when we can bring in this. That's why I've also brought it just right now so that you can incorporate it in your trading. Are we together? So just a reminder, all these currencies have their indices, and what is an index of a currency? It is used to measure a currency's value. And there's an aspect of correlation in them, which I've just explained, right? If the index of a currency is expected to go up, it means that currency is going to gain strength. And if the index of a currency is expected to go down, like this one, you see it's at resistance, which we're still monitoring. It may break that neckline. If it breaks it above, we expect the dollar to gain strength, meaning Euro USD will go down. If it is rejected from at resistance, like the way we are seeing it's being rejected, then that's when you can see Euro USD going up, just like you're seeing. This applies to GBP USD, AUD USD, and the rest, right? So, and also do not forget that as a trader, you can incorporate at least two of the types of trading, of analysis, technical analysis and fundamental analysis. So, and also always, every day as you're doing analysis, make sure you check fundamental analysis with technical. If you use sentiment, it's also okay, but I'm just using technical and fundamental because most people use that, the two types. So the website I recommend or the app I recommend is you can use Fastbull, right? You can get the link in the description. Have a good day.